As someone who has basically used and studied fair value gaps throughout their whole trading career, I can confidently tell you that most traders use fair value gaps completely wrong. In order for me to give the solution to that and for us to understand what the missing piece actually is, we first, of course, need to understand what exactly is the problem. You probably know that fair value gaps can tell you a direction. On top of that, they can also act as a support and resistance level. So for example, this bullish fair value gap suggests that we might want to continue higher, so the direction. On top of that, if we now create a retracement back into the bullish fair value gap, it can act as support, we can reject from it and continue higher again. Now that's great, but that's exactly what the problem also is. So the problem is hidden in plain sight. To make this more clear, up until around a year ago, I was still using the following phrases. So the first thing I figure out when I open the chart is the direction. And eventually I might come to the conclusion that we want to continue higher. That's the bias, that's the direction. Now, next to that, so the question afterwards becomes, okay, so if we want to continue higher, what can we continue higher from? So in the scenario that we do create a retracement, what can we continue higher from? What is that support level that we can continue higher from? Then around a year ago, I ran into a problem that I quite frankly did not know the solution to just yet. So I went over everything that I knew. And I sat there and I asked myself, well, what if it's not about if we are going to continue higher, what can we continue higher from? What if it's about if we are going to continue higher, what is preventing us from continuing higher at this moment in time? Because think about it, if there's nothing preventing us from continuing higher, then, well, what are we going to do? We're going to continue higher. But as long as there's something preventing us from continuing higher, then these fair value gaps will feel more random, as in sometimes we will consolidate, or sometimes right here, they will fill. And that happens when we have something that is preventing us from continuing higher at that moment in time. Now think about it like this. If I start randomly running into that wall behind me, then that wall is essentially preventing me from moving forward. So no matter how strong I am, no matter if someone pushes me in the back as well, I'm not going to move forward, right? Because there's something preventing me from moving forward. There's a blockage, essentially. Now think of the wall as, for example, this swing high right there, where you can have a beautiful fair value gap that might give you a boost to continue higher, but as long as the thing that is preventing you from continuing higher is still there, that fair value gap is not going to push price higher. That's why this fair value gap fills, but on top of that, that's also why this fair value gap fills and the one below it, because we have something preventing us from continuing higher. But on the contrary, that's also why this fair value gap does hold, because the thing that is preventing us from continuing higher is actually overtaken. And when that wall is removed, price is free to run. So to somewhat stay ahead of the curve, the question is not necessarily what can we continue higher from, it's more so about what is preventing us from continuing higher. The same way, if we want to continue lower, it's not what can we continue lower from, it's more so about what is currently preventing us from continuing lower. And if we figure that out, that's the missing piece to these fair value gaps. They will work so much better, I can promise you. When price retraces back into a fair value gap, there's three different outcomes of what can happen. We can have the first outcome right here, and that is when we retrace back into the fair value gap, we simply continue higher. That's the ideal scenario, of course. But we also have two different scenarios. The second scenario is where price just completely ignores the bullish fair value gap and ends up potentially being a losing trade. Now, the third option is where we retrace back into the fair value gap, where we create a consolidation which could end up being a break even or a losing trade, but eventually the fair value gap still ends up failing or eventually still pushes higher, but you do end up taking a loss, and then eventually the fair value gap might still hold and you miss the trade essentially. So we have consolidation, loss, and winner. Now the winner is only one of the three options, one of the three things that can happen when we retrace back into the fair value gap. Now, of course, that's not necessarily ideal. And of course, ideally, we only catch the winners and we avoid the losses and we avoid the consolidations before it actually starts to move higher. And we ideally do catch the move higher after it consolidates. Good news, because all of these three fair value gaps do have something in common, even though the outcome is different. All of them have something that is preventing them from continuing higher right there. That's why this fair value gap fills. That's why we consolidate right here. But on top of that, that's also why this eventually does turn into a winning trade. If you understand the thing that is preventing us from continuing higher, you still catch the winner right here. You avoid this loss right here, and you avoid the consolidation that happens right there as well. Okay, so there's a couple of questions that are still left unanswered, essentially. As in, How do we understand what is preventing us from continuing higher? What exactly is that? How do we also understand when it's not preventing us from continuing higher anymore? All things we're going to dive into. But let's start at the basics, because this is oftentimes where people already go wrong. I need you to understand what a bullish fair value gap, like this fair value gap right there, actually stands for. So a bullish fair value gap, just in very basic language, shows you that there's more buying power than selling power at this moment in time. That's why we are aggressively moving higher. And that's why a fair value gap gets created. So even, again, all the traders that don't use specifically fair value gaps, they can still understand that, for example, right here, there's more bullish momentum than bearish momentum. So if we understand fair value gaps like that and you really think about it, then isn't it counterintuitive that we want to see a retracement back into the fair value gap? Because the fair value gap shows us that we are moving higher aggressively, but most traders do want to actually see a retracement back into the fair value gap. So that's against the bullish momentum that you actually wanted to see. And now what they might do is go into, for example, the lower time frame, like the 5 minute right here, and then wait for new bullish fair value gaps again to align, to then look for an entry, maybe cover the lows and maybe targets a 1 to 2 RR. So you're not staying ahead of the curve. Actually, what you're doing is you're always too late. You're behind the curve, because all the momentum happened right here, where we were aggressively moving higher first, where it was ideal to buy, to continue higher. Then we create a retracement. When we create a retracement, we now have bearish momentum instead. So we are moving lower more aggressively than we are moving higher at that exact moment in time. So when we then see a couple of lower time frame fair value gaps, that's basically us right here trying to call a bottom and then hoping and praying that price will go up. It doesn't make a whole lot of sense. It's very counterintuitive. And at that moment in time, what is also happening, and the gray box that you see right here, is there is something that is preventing us from continuing higher. Then the retracement that we create right there, that bearish momentum, if we want to buy, ideally, of course, we avoid that. And then afterwards, we are a part of these new moves when we are aggressively moving higher. That's where you'll find the easiest trades. Again, the easiest trades, the most satisfying trades, are the trades where you enter and it just explodes higher to your take profit. But those trades only happen if you trade alongside the momentum. Now, just like I mentioned that the retracement back into a fair value gap is actually low probability because you're trading against the momentum, I'm going to make it even worse. So for example, the reason why we actually retrace back into fair value gaps is oftentimes because we actually are rejecting, for example, from a swing high or from a bearish fair value gap. That is pushing price lower right there back into the fair value gap to then continue higher from it. But that's oftentimes what I refer to as a ping pong effect. Now, or you might know it as table tennis, where we trade into, for example, a swing high. That swing high causes us to create a larger rejection towards the downside. We then trade back into a bullish fair value gap. That fair value gap causes us to continue higher. It's like back and forth, back and forth, back and forth. Now, inherently, you might not actually see a problem with that, but there is. Because trading is all about probabilities, and you can replace the word probabilities with possibilities. Trading is all about possibilities. So in your trading, to determine if something is likely to happen, if something is high probability, then you need to determine what the possibilities actually are. And if you're only left with one real possibility of what could happen or what could be the case, that's very high probability. Imagine a crime scene, right? The detective is going around looking at fingerprints. The fingerprint matches with my fingerprints, for example. Then that's taking away the possibility that someone else might have held the knife, for example. So if only me held the knife and we can see that through the fingerprints, then that's the only real possibility. So that makes that choice that that person is guilty very high probability. Now, why is this important to understand in trading? Because the moment we actually trade into a swing high like this right here, what are the possibilities? There are mainly two possibilities. We can either blast through it to continue higher, or what could also happen is create a retracement from the swing high to actually respect the swing high, potentially sweep it, and instead create a larger rejection to potentially continue lower. And then the possibility is that we might continue lower all the way, and we might keep respecting the swing high. Now stick with me here because this will make a whole lot of sense. Okay, so that's the first possibility, that we can create a rejection and we can potentially continue lower because we are respecting the swing high. Now on top of that, again, we also understand these fair value gaps to be support levels, right? So how the swing high is a resistance level, we understand that fair value gap, bullish fair value gap, to be a support level. So a possibility is that we can either blast through it all the way, or we can potentially continue higher from it, act as support, reject from it, and continue higher. So there's a bearish possibility at play, but also a bullish one, right? We can potentially continue lower from the swing high, but we can also continue higher from the bullish fair value gap. That's contradicting itself. That's exactly where 50-50 price action happens, where you can't see clearly if we want to continue higher or continue lower, because there's two opposing possibilities. It's the same with the crime scene. If on the knife, my fingerprints were on the knife, but also yours, then there's two possibilities. It's a bit odd, it's contradicting. So what do we need to do? We need to take away one of the possibilities. And then you're only left with one possibility. And that's exactly the thing that we're talking about when we talk about what is preventing us from continuing higher. Because what is preventing us from continuing higher is then the opposite possibility. So let me explain. For example, right here, we see this bullish fair value gap. So again, we can potentially retrace back into that to continue higher. It's a possibility, right? We can potentially continue higher from it. Now, on top of that, we also trade into this swing high right there. If we want to see price going higher, then we don't want to see the bearish possibility actually play out. We want to see that bearish possibility be removed. So that swing high is currently preventing us from continuing higher. And that can be a swing high, but that can also, for example, be a bearish fair value gap. This bearish fair value gap at that moment in time is preventing us from continuing higher. That's why this bullish fair value gap is struggling a lot more to push price higher, because as long as this bearish fair value gap is preventing us from continuing higher, we will have a very difficult time actually pushing price higher. So the thing that is preventing us from continuing higher can always be two things. That's either a bearish fair value gap, or that is a swing high, like we see right here. Now, if you inverse that, and for example, you want to see this bearish fair value gap actually hold and continue lower from, then the thing that is preventing us from continuing lower can be a bullish fair value gap right here, or it can be a swing low like we see right here that is preventing us from continuing lower. So then the only question that is left unanswered, how do we take away the thing that is preventing us from continuing higher? How do we stop that? How do we take away that possibility? The answer to that question is two candle rejection. Now, this is also the moment in the video where it's going to get quite advanced quite fast. Now, there are multiple links to videos in the descriptions that you can watch after this video that might also help you to fully understand this topic. In order for us to understand when the thing that is preventing us from continuing higher is no longer preventing us, we need to understand two candle rejection a little bit. Because the moment two candle rejection fails is the moment that the thing that is preventing us from continuing higher also fails. So for example, we have this swing high right here, this one. That swing high and any PDRA in general has two moments it can actually create a rejection from it and can actually hold. And that is either on the same time frame as the swing high right here, going to be on the first candle or the second candle. So very simply said, either the first candle that trades back into this swing high is going to create a rejection away from it, so to potentially continue lower. Or it's the second candle, where here with this swing high, we see a long wick right there. It's the first candle. Now, with this bullish fair value gap, for example, right here, that actually fails, ends up failing, it's actually the second candle right there. Because the first candle is not a large rejection. What can happen? The second candle right there can still sweep the previous candle low to then actually create the rejection to potentially continue higher. After it's either the first or the second candle, what should happen is that we keep continuing lower right there, and we actually start creating those bearish fair value gaps as well to understand what the direction is. For example, with this bearish fair value gap, the bearish fair value gap, we trade back into it, we create a large rejection with the first candle. Now, the next few candles, they just follow through, so they keep continuing lower. With this swing high right here, we see the first candle, it's a rejection. The second candle actually continues lower, but quite soon afterwards already, we start to continue higher again. If we now start to continue higher again, and whether that's from a fair value gap or not from a fair value gap, that doesn't really matter. And again, I'll explain why in a little bit. Because if that two candle rejection doesn't actually follow through and we don't keep continuing lower, and we now start trading back above the first rejection high that we had right there, that right there is a sign that this swing high is not preventing us from continuing higher anymore. It has been disrespected, it has failed. And that then ultimately allows us to actually really move higher right there and be a part of these moves. Now, I'm going to give you an example of that in just a little bit. But that's also the reason why, for example, this wasn't a great trade ID, because we have this bullish fair value gap right there. And that bullish fair value gap, we trade back into it, yes. But the thing that was preventing us from continuing higher never got overtaken at that moment in time. Only later when we start to create these new fair value gaps, and then we have this new swing high to deal with right there. This right here is a trade from an MT student named Jerome. Thank you very much, Jerome. He shared it this morning during the live session in MMT. Because during the live session in MMT, we were looking at NASDAQ. And we could see NASDAQ was actually rejecting from this swing low right there. That was the thing that was preventing us from continuing lower at that moment in time. That is where we were struggling. So even though we have this bearish 1 hour fair value gap right there, we were struggling to continue lower because the thing that is preventing us from continuing lower was still there. Only when the 2 candle rejection actually started failing right here, that is where Jerome now got involved to then continue lower, targeting around a 1 to 2 hour, I believe. Because that is where he can now ride this move right here, where we actually move aggressively lower. So again, trading alongside that momentum. Again, think about it, right? When there's nothing preventing us from continuing lower in this case, then price will just aggressively move lower because there's nothing preventing it from doing so. So for example, what I just mentioned about you don't even need to retracement back into the fair value gap anymore, that I meant that literally, as in, for example, here on silver, we understand the bias is very bullish. So we are going to likely continue higher. It's at all-time highs. It's just very bullish. So a large part of my trading plan right here is simply, okay, what is preventing us from continuing higher at this moment in time? Here we have this bearish 1 hour fair value gap right there. We see that we have this 2 candle rejection high. As long as this thing is preventing us from continuing higher, that bearish fair value gap, we won't go higher. But if that bearish fair value gap is now disrespected, has failed, it's not preventing us from continuing higher anymore, we will explode higher. This is where you don't even need to see a retracement back into a fair value gap right there. Because again, think about it, right? If nothing is preventing us from continuing higher, it will go higher. That's just the nature of things. If there's no walls, if I'm running and there's no walls right here preventing me from going forward, I will keep moving forward. That's where I don't even need to see a retracement back into a fair value gap right there, because I actually don't want to see that, because that's very counterintuitive. I want to see price explode higher, go higher. And that's exactly the moment right there where you can then look for an entry. Now, this is of course all fun and games in hindsight. So the reason why I showed you that an MT student caught it is because they know how to apply it. They've learned it. It took them some time, but they know how to apply it. They've gotten payouts. I've used this exact same method to show you on YouTube right here, all live, throughout a couple of YouTube videos, how I passed the challenge and eventually got a payout. Now, if that's something you want, I would highly recommend to also watch this video. It adds on to this topic and makes it even more clear. All right, perfect. Thank you.